Well, as I mentioned, we're going to have a few new faces. That wouldn't be the face, but this is what we're talking about. We're talking about insurance and your life. And we have our new expert, Anthony Pantone, who's going to join us, a wealth advisor. I think we could all be better in our wealth and finances,
sure,
Anthony, so I'm so glad to have you on board.
Thanks for having me.
And we're going to talk about protection, and specifically when it comes to life insurance. And a lot of us, I think, hum and haw about, oh, should we spend the money on life insurance? What does it do for us? How do we do it? Is it just a scam? All that kind of stuff. So you're going to clear that up for us and make it so that we understand it and maybe look at what we should be investing in.
I'm going to do my best. Insurance is one of those necessary evils, so it's not a real popular topic of conversation at the dinner table. But what I'm going to do is just explain to you the two basic types of life insurance. We start off with the term insurance, and there's permanent. So term insurance, the coverage remains level for life. When you take out your coverage, if it's $200,000, it'll always be $200,000, but the payments are based on the term that you pick. So a lot of people don't pay attention to this, and what happens is they might start off with a 10-year term or a 20-year term, so your premiums are guaranteed for that length of time.
Oh, that's a good price.
Very, very cheap in the very beginning stages. But what happens is that either they find out the hard way and they wait till their term matures and it renews for another time period.
But at a much higher rate.
At a much higher rate because you're that much older now. Now, the benefit of term insurance, the only good thing about it renewing is that you can't avoid the high price, but you don't have to re-qualify medically for it. You'll automatically be approved for the next term if you're willing to pay the payments. But what happens is that the first phase of the term insurance is what attracts people.
Right.
But when it hits its renewal points, it's often so expensive that people cancel it. And then if they have no other backup insurance plan, they're left with nothing.
Which is awful, considering they've probably been paying it, as you said, for 10, 20 years already, and then to not have anything after that.
It's a peace of mind type of product. So term insurance, there's no guaranteed payout that if you outlive the term, then the money that you paid into it, you don't get back.
So now how does that compare to the permanent insurance that you would have for your lifetime?
Well, in this graphic here, it shows the premium cost on the side and time over on the bottom. So permanent insurance starts off more expensive than term coming out of the gate, but in the long run, permanent insurance becomes the cheaper form of coverage.
Because the rate stays the same.
Yes. Now, what I did over here on the other side is that you can take the best of both. So permanent insurance starts off more expensive, so it kind of, to put all of your coverage needs under that type of plan, it might not make sense, and it'll definitely keep the cost up higher. So to soften the price, you can mix a combination of term and pair it with permanent insurance.
Great idea.
If a family in the short-term needs column, maybe they need at the starting stages of their life, they have the mortgage, they have young children to deal with, savings are low, so they're financially vulnerable. So you can pack up extra coverage very inexpensively by adding the term on top of your permanent.
Right, because as you said, this one will be at a lower price because it is for the first section of that term.
And you take advantage of that lower price while you need it the most. Later on in life, after 20 years has passed, your mortgage hopefully has been reduced.
Let's hope so, right?
Yes, hopefully it's been reduced or it's been paid off. The children are grown and they're adults now, and hopefully they're out of the house or independent. But as life goes on, your needs decrease over time, so that the permanent insurance you fall down on, the price was set up 20 years earlier, and that price stays the same for life.
So you still have your, say, 100,000 coverage, but you're not paying nearly as much for it as you would if you jumped to a second-year term on your term insurance.
If you're purchasing insurance over and over again at older ages, you're definitely going to get more expensive as time goes on. So it's really important that you identify what your needs are. Why are you buying the insurance in the first place? And once you figure out what your needs are, you can decide, okay, my timeline for this coverage is more suitable for a 10-year term, or I would like to have a 30-year term, or I want this to stay with me for the rest of my life. So knowing that up front will help you make a decision of which type of product you should be buying.
You made it nice and simple, Anthony.
Well, it's hard to, it's intangible product, so I tried to
And I mean, life insurance is one of those things I think we hum and haw over in our lives as to whether or not we should have it, and starting younger is better.
Absolutely.
You know, I learned that the hard way. So now I do want to just talk, we just don't have much time left, but you're a Hamiltonian.
Yes.
Born and raised here.
Yes.
went to school here,
Yes.
and now you've got your business here.
Yes.
So we couldn't be more Hamilton than you.
Yeah, I probably have Hamilton running through my veins. I love the city, yeah.
Well, it's great, and I'm so glad that you're going to come on board as one of our experts for
Looking
Hamilton
forward to
Life
it.
this season. You've got some great ideas for us, and making people understand something like life insurance and how to deal with it, and also how to be wealthy through as we age. So thanks so much for that. You can check out Anthony at capfinancial.ca. You can also call 905-297-1179. And what's your website?
It's capfinancial.ca.
Perfect. All right. We'll see you in about a month's time. We'll have
Sounds
you
good.
back on a monthly basis.